You're watching SmallCapSteve Live. I am the SmallCapSteve, the original. Excited. We got a big show today. Kelly Jennings from Powerband. We know they have a huge following. The stock's just been skyrocketing. Lots of diamond hands out there, I take it. Maybe later on we'll get to some Canadian micro cap and venture news with my trusty sidekick, Jason. So buckle up. Let's get started. Kelly Jennings, the man, the myth, the legend.
Yeah.
Couldn't make it yesterday. You're on today. How's everything been going? I'm assuming that it's pretty busy in your world these days.
Yeah, it's been busy. Good busy, mind you. But yeah, a lot going on. Kind of like it felt like we were in the hold mode for like over a year and a half, and now we're in go. So it's good. Excited, happy to see the stock matching where I believe we are as a company. Not quite where I think it should be, but closer than we were, say, a year ago or the last time we spoke, right?
Mm-hmm. Yeah, Jay just made the noise that he makes when he wants to ask a question. What is it?
I didn't even know I had a noise. That's interesting alone. So, I mean, it's been a wild ride. We were in at 6.5 cents in December 2019, so to see it here today is just outstanding. I know you've been working on this MOU for a while, and that's really what people want to hear about. So why don't we just jump right into it? What can you tell us about it?
Yeah, I mean, we've been working with Allianz since actual April last year. And when we started the journey, they were very clear that their organization moves very methodically, very thoroughly, and that if we were looking for them to provide everything and like bang, they were the wrong company. Their due diligence process is quite extensive, and they did a lot of background checking ourselves, like all the main principles and where we came from. And from our ongoing discussions, I knew that their vision matched up well with us, and so it was, I won't say frustrating, a little frustrating. I'm not gonna lie about it, because I thought, wow, this is a long journey, but they stood by us. They continually reassured us that they were here. And so, yeah, it's good. It's a great move for us. Right now, they're ready to roll out the insurance products, which are likely going to be something that no one's ever seen in the EV market, not just in North America, but on the globe. And that's really huge, because nobody really has a handle on electric vehicles yet, and they do. And so that part of it is really exciting, because I think we're going to offer unique products for the consumer and the dealer to protect themselves. And the one thing that anybody that understands the car industry, what they're known for, is they are very fair. They're not into taking products and marking them up too high. We all have to make a living, but it's got to be fair. So that was one of the interesting parts. Over the last year, I learned from them, because I've been in this a long time, and there are some people in the insurance industry that are good, but there's some that are like, how much we hate you for? So it's kind of a different mindset going forward. And then, of course, on the business side, we want to be very heavily involved with the EV market, not just here, but globally. They're in the same boat. And so, yeah, I think we're very fortunate to have them as a partner, because they're very, very, they get thousands and thousands of people or companies looking to do business. And we were able to get through the heavy deep dive process that they do to kind of qualify as an investment opportunity. So yeah, it's a huge difference maker for the company on a number of levels, and not just the thing that's the best part. The auto sector is where we're. Go ahead, sorry.
I don't know if you can speak to this or not, but Allianz X, have they invested in any auto fintech plays before? It sounds, my understanding of insurance companies, and I haven't spent much time analyzing them, but we lost Kelly there. Oh, he's back.
Lost you there, buddy.
Okay, you're back. With insurance companies, you have to manage this large float in order for the whole business model to make sense. Obviously, when you're leasing vehicles, you get to charge APRs that are much higher, interest rates that are much higher than conventional, like leasing a vehicle rate. Is that something that you think that they're finding particularly interesting? And is that by investing in an auto fintech play, lost them again, uh,
You're cutting
by
me off. I
yeah,
lost you there.
by investing in an auto
Can you
fintech
hear
play,
me?
yeah, we can hear you. Can you hear us?
Yeah, you're coming back to me. Yeah, I can, but you're intermittent. I heard the part about the insurance company and the leasing, and I couldn't catch the rest of the question. Sorry.
Right. So, is there what do you think is driving Allianz to want to invest in the sector?
Well, I think that well, first of all, they have never been in the U.S. With any real in the auto sector at all, and I won't get you into the reasons, but they're corporately weren't comfortable on the way they did business here. But I think they're in it because they see themselves as a leader. Their global footprint is quite massive. As you know, they're very, very big into China. They came in last year, and they're looking at the electric vehicle market as something that they believe they can basically provide products that currently aren't available. And because they're in, they see what's happening in Europe, and they see the electric car market, the future of the car industry. I mean, it's not to say they won't do gas combustibles, but they're here really to take a look at what we've got. They own well, I think it's the largest listing site in Europe called Group One, and they bought it, but they've been having trouble with it because clients aren't just looking for a listing site. They want to be able to buy the car, sell the car, do everything that like with our stuff, and that's I think was a motivation of to provide an all-inclusive solution, and that's what really I think motivated them because they see that's going to be the future of the car industry is
So,
the ability for the consumer to kind of pick and choose how they do business.
so I think you're touching on something that's really important for people to understand is what's the difference between when you say sort of an all-encompassing solution as opposed to a listing site. Because when a lot of people hear about this, they're kind of saying, well, they're like, what are they trying to be, Auto Trader? What's the fundamental difference between what you guys are doing with drivers and what say Auto Trader's doing?
Well, what Auto Trader does, they list dealership vehicles for sale, and you kind of go through the process of trying to buy the car. It's like it's replaced a lot of the other venues that the car dealers use, and so you call, you check on the car price, do this and that. We do have a listing site. I always use that Airbnb model. We have access to millions of vehicles, but only when we need to buy them. And so what I think we provide, we aren't a middleman. We are a facilitator between the consumer and the end user of a car. You can buy your car, sell your car, background check your car. We've got a database of vehicle backgrounds. I'm pretty well for 30 years. So you can basically do all the research where we are, do quotes for yourself, and you may decide to go to the car dealership, but you may want to do the entire deal from your home. And that's what we believe we've got. And so that's what I think differentiates us between, say, Carvana or Car Gurus is we're not competing with the dealer. We're just trying to facilitate the acquisition of a commodity called a car. And the only thing that might be different, we're also going to be trying to provide that same what we currently work with dealers with. We'd like to be able to do that for consumers directly, so that if they want to buy and sell a car privately, which 50% of the population does, we can want to be able to facilitate that same process. We can fund you, buy your trade-in, sell your trade-in, deliver your vehicle, just like a concierge service for the auto industry.
So this is a truly scalable auto fintech solution. That, in what I like to say that I like about it is, you guys address the actual addressable market, right? Like we hear about this with so many of these plays that you look at them like a Carvana or some of the other like a Lithium Motors. They're really just effectively just standard car dealers. Carvana, they like to masquerade and pretend that it's fintech. It really isn't. It's just a standard dealership, except instead of calling their dealerships, they call them, what do they call them? Vending machines.
Vending machines, yeah.
So you guys are soon going to have 4.5 million cars listed on your website,
Yes.
the Drivers Exchange. Now, you guys don't actually own those cars. So does that mean you guys are going to have a team that sort of coordinates, or as you use the term, concierge, that calls up whoever's selling the vehicle and facilitates that process for the end user or the buyer?
Yeah, like basically we get access to the cars. We actually already have the cars in a database. but we're trying to, there's integration points with like CB Auto and stuff that we're still completing. So the idea is the dealers, so there's going to be dealers that are they're already going to come on. We get access to everything. So if somebody wants to buy a certain vehicle in a certain territory, we would contact the dealer and ask if they're looking to sell. And then kind of like, we've got like what they call a deal desk that will facilitate the deal. And we're here to help it get done. We're not complicated. So if the dealer and the client want to do business directly, we'll facilitate it. If we want to do the funding for them or give them the options that they've got, we'll do that. But the idea behind this industry is if you think you're going to force people to do business the way they used to or the way you think they should, you're going to fail. And at the end of the day, what we've tried to create is an environment that you can adapt the system to meet what you want to do. And we don't have like, I know Vroom had a rough February. Being in the car dealer for 30 years, the biggest risk with the car industry is depreciation on the asset. And they had a rough time because their assets started depreciating. Where you go look, and we have a Airbnb model. I'll buy the vehicle, pay for the vehicle when we have a buyer. Otherwise, it sits there and we don't charge the dealer any money for listing the cars. We're not looking to gouge anybody. Everything we do is based on a transaction model. So if we help facilitate, we get paid like in the auction, and or if we do the financing, the same principle. So we've tried to create a model from our perspective where nobody gets injured and it's fair and open. And like you say, the consumer wants access. They want to be able to make decisions. They want information. They want to be able to sit at home without being harassed, check the background of cars, Ford, GM, Chrysler, pickups, whatever, and do all their analysis. And then we facilitate the deal. Simple as that.
Mm-hmm. So in terms of how you're actually going to acquire customers, like this is an incredibly competitive space, right? Like you're not going up against like you're going up against, say, Auto Trader, Carvana. Like Carvana, I assume, is spending hundreds of millions of dollars in advertising. How do you intend to actually compete without having $100 million cash on your balance sheet to just rip through like Google ads and YouTube ads and commercials on CNBC like Carvana does?
Well, you're right. That was one of the big challenges, and that's part of the reason we entered into the agreement with the CB Auto and their affiliated membership, because they've got approximately 50 million that are available, and that's what we're doing right now. We're integrating our solution indirectly to them, and that was one of the areas that we wanted to focus on, is have our own consumer base. The other one is there are dealers, believe it or not, that are not big fans of Car Gurus or Carvana, and believe it's not hard for them to come on board. And so the nice thing we have that I think is different. I've been in the industry for 30 years. I've owned pretty well every OEM. Brian Hunt, our partner, a dealer. Darren Swenson's been a dealer. We've got people in the management team that have worked with all the big corporate entities in the IT space, like Cox Automotive and such. So we bring different mentalities to the table. We try to look at it from a dealer's perspective and used our historical mistakes, I guess you want to say, to create an environment that benefits not just the dealer, but the consumer. And I think that makes it different. We didn't build this in isolation. We, like people like Troy Duhan, who's our partner, we looked at the historical processes that we use that are failing, and we created the monsters, the middlemen, and trying to identify where we fell down and make this one a simplistic, direct integration between the consumer and the end user. It could be a rental company, it could be a bank repossession, it could be a private individual, it could be one of the CB Auto members. So that's what we kind of tried to do. We don't have the cash to kind of money. We actually are building the business to make Carvana. I'm not smart, but I don't know how or where or when they're going to have a profit stream. But I'm not the smartest guy in the world. There must be people that believe it. I don't see it, but I've been wrong before.
Yeah, if I wanted to have some fun, it wouldn't be fair to you, but I could bring up Carvana's operating cash flow, or just their cash flow statement. The fact of the matter is that they're transacting 200,000 cars in the last 12 months, and I believe that they're still burning cash with what's supposed to be a fintech solution. I don't understand how you're doing that level of transactions, that level of revenue, and still burning cash. So there's a component to it, and I think that this is where the tech investor sits today. is its total addressable market and ultimately disruption, which is then, you demonstrate that through doing lots of transactions. Is there a plan at some point to start to talk about how many transactions you're completing within, say, the financial statements or the MD&A, or just sort of including that in your monthly updates?
Yeah, that's kind of like, because like in the last year we've consolidated like 4 companies, right? And that's not easy. And yes, I think our transaction base, when we're fully 100% going down the right road, I'm pretty certain we can match their volume easy. Because you got to remember, I have the opportunity to sell the car and buy the car with our consumer auction. I can lease the vehicle. We could have monthly subscriptions with some of our dealer body partners who are interested in getting the data. And I think the good thing, and I'm not trying to be mean or anything, but Carvana served a great purpose. Dealerships have been around for over 100 years. The business is basically pillared on, you buy a car, then the way you sell any other car generally was always about servicing the client. So your service department generally sells your cars. The Carvana model is throw them out there, sell the car, they go somewhere. They're looking, they don't have any, people don't realize cars of today have more electronics and parts in it than Apollo 11. And the type of people that you want working on the vehicles are going to be top flight people. You take it to the next level. And I own Carvana, I own a Tesla, but the electric vehicle wave's coming, and the type of person that's going to repair that car is going to be technician plus, and you got to be able to provide service. These electric vehicles only have 15 moving parts, which is great, but if you have a problem with your electronics, you're going to have a big issue. So you got to be able to provide a full solution. So the sale of the car is really important, but it's keeping the client happy after the fact. And that's, I think, where we and our dealer friends can say, hey, it's apparent we screwed up. We as the car dealerships and the OEMs have to take responsibility for your Carvana. But I honestly believe they're on quicksand. And when all the dealers, and not all will get on it because it won't be around anymore, but when all the dealers work together with the consumers and their various associations, you don't need nobody in the middle. It's like, look at that, I said the Amazon. There's no reason for us not to be able to provide the solution where the client can dictate how the deal goes. And if you don't adapt it to their needs, then you shouldn't be in this business. It's just happened that you said it's accelerating so quick that you used to do the same thing for the same car for 5-10 years. Now it's like the change in the industry is happening so rapidly, and nobody in the world, I don't believe, is going to basically predict what's going to be the end game. But I'll say one thing: the car dealers are going to be part of the future, and the ones that adapt will be here. The ones that don't will be gone, and so are the OEMs that adapt.
Now, you used to own, or I don't know, do you still own car dealerships?
Yeah, I'm a partner in 4.
Okay.
I'm actually thinking of buying another one right now, believe it or not. And the good dealerships have been good for me. I've had pretty well all the big ones. One time I was a partner in 12 and owner, but I had to sell them off, went my way. It's always good to have a dealership as a litmus test. We're a Canadian company, but for the past 3.5 years, we focused all our energy on U.S. solutions. And we're going to hopefully launch Canada this year. But it's a great place to test things. They didn't test them in a little, like a studio. My guys went into the stores, looked in the business manager's office, looked at the service department. We built our solutions based on what we do in the real world. And I think that's one of the big advantages we have. Say Brian and Darren, they've been in the physical auction space for 15 years, and they were known as one of the best. And I tell you, I've been to a lot of auctions, and the 71B auction in Arkansas was the best I've ever seen. Nobody ever complained about that place. So what we have done, and we've taken a little longer to get to market because we did not want, especially Brian, whatever we do has to work and it's got to be exceptional. And that's what we are trying to do. We want to make buying a car through ourselves and our partners exceptional experience, not just a good experience, but exceptional, because you want to be the 4 seasons of the car industry, and that's what consumers are expecting now. They want that honesty. They want to be able to make decisions. They want you to adapt to their needs. And you know what I'm talking about. It's just the way business is today. You got it right now with companies that are doing really well. They've managed to grasp the consumer's needs, and they're flourishing.
Okay, so I've asked you this before. What's the timeline on when we might see driver's exchange launch to the public with we'll be able to go to a website and see 4.5 million cars available online. Is there any sort of timeline you're working towards?
Yeah, well, as I said to you, we've got the cars in a system right now, and we're playing with it internally, and we're going to test it with our CB Auto people first, and then, but you're going to likely see it realistically within probably in April. We're not far away. It's a matter of stitching. See, you've got your solution, and then you got, say, a partnership with CB Auto. We've had to look at their process and adapt them to what we need to do. And so that's what we're doing now. It's now a matter of adapting the system, start testing it. And I think you're going to see, I would say sometime in the near future, like in mid-April, we're going to start testing it and then roll everything out across the United States. Same thing for the peer-to-peer auctions ready to go. We're going to start doing that. Our finance portal, of course, is already up and running. So what we're doing, each one of the individual verticals can make money on their own, but when you aggregate everything under one house, then it's far more dynamic. But the good news for us is the way we built the company, we likely could break even with just one of the verticals. That's why I try to go back to talking about some of these other companies. When you look at the way they operate and the risks and the pitfalls, one is depreciation. The other big expense is the amount of money you've got to pay to get people on the clients. And that's really where we did the deals with these insurance companies, because they've got 1,200 people out there talking. So one of the, I think the reasons we've been getting some good response in the market is we've been running the pavement for 2 years, and then we went live in the summer. And I think some people are starting to understand that we're little, but I think I'm not trying to sound like an egotistical person, but I'm pretty confident that our solution is beyond anything anybody else has, period. And I mean that. And the Germans, Allianz, I think are in the same boat. They did their due diligence, and they felt that we're the one company they dealt with that had everything under one roof. And that's part of why we took so long to get to this point.
Why do you think that is? Like, it seems strange to me why no one's came up with this solution, right? Like we see Auto Trader. Okay, it's a listing site which is primarily used to generate leads for dealerships.
Yeah.
We see Carvana where they're trying to scale. They're not necessarily like, no one's kind of just. I assume that others have tried, but why do you think it is that nobody's been successful trying to create this sort of network that facilitates transactions between consumers and sellers?
And one of the big is a collection of people from big corporate companies like Cox Automotive, finance companies, and dealers and auctioneers. And none of these companies have that kind of background. We've got super successful people that have been good, and they're part of the industry. And now you're aggregating that history under this company. And I'd be the first to say, if I hadn't partnered with Brian, the auction that I had built originally compared to the auction we have now is like a different time zone, different satellite, because Brian cares of how to do the customer properly. It's hard for me to articulate, but the guys at Cox Automotive came on board. They all were in different sectors. Some were in the finance sector, the banking sector. So we got some talent. Our new president is like a amazing, intelligent guy when it comes to managing databases and utilizing, like say with CB Auto, how do you monetize? How do you do the monetization of a database? So I think that's why we're different. We've got some, I'm sure all these guys have some supremely intelligent IT people from a variety of backgrounds. I like to see a number of them that have owned car dealerships like I've had for 30 years. And guy got Troy Duhan, who's got 20 or 37 stores, and he's in this thing. So what we've done, we tried to build it. But the other thing that we didn't forget about is all our knowledge is good. But if we don't translate that knowledge and ability to satisfy the client, then it's all gone for naught. And I think that's part of the reason there's a lot of people involved. So we look at it from a consumer's perspective. A guy like John Lamb, he's the guy when it comes to the consumer experience. So to me, that makes us different, makes us better, and why we've been able to do it, because we brought the right skills to the table. Simple.
Okay, so let's maybe take some questions here. Here's one from Jeff H. asks, when will we hear more about an MOU with a major EV company? Not sure if you can answer that, but perhaps you can maybe circle around it and talk about your interest in working with EVs.
Yeah, the EV thing has been at the table for a while. Being a car dealer, I have access. Troy Duhan does. We already know what's happening in the EV space. So announcing a relationship, that would likely, I really can't say, but we've had a lot of conversations. And one thing I can tell you, the EV space needs a simplistic leasing package with a great warranty. My partner, Allianz, I've never seen the kind of insurance coverage they offer. So I suspect by the fall, we can, just everyone has to understand, I can lease an EV now. We don't need agreements with any of them because we can be pretty competitive because of our flexibility and our rates. And we've got, with one of the products that Allianz will bring to the table, they're going to put an insurance policy for the client that they don't have to worry about the residual value. Now, I've never, in all my 30 years, ever had an insurance company tell me, I'll guarantee the residual value. Especially in electric space, because there's not the history there's in the gas. You can make somebody, you can guarantee a lease and bring it down so low and go, yeah, I'll guarantee it at that level. But the Allianz people are trying to make it very competitive for the individual. And they see the EV market as exploding, right? So I think I'm not, let me say this. I bet you there's not one OEM who looks at what we're doing and will not say, we want to be part of it. I think that was part of the reason we entered into an agreement with Route One, who is owned by Ford, GM, Chrysler, Toyota. And we've had some initial, I don't want to be like, I got to be careful, but that's our focus. And if you can have a formal agreement or you just offer the client what they need, but that's going to be that's probably Allianz's number one purpose for being with it right now.
Mm-hmm.
And I don't have to say that they're pretty well connected with out there with Mercedes, BMW, Porsche, Audi, and Volkswagen. So they're coming here with their eyes open.
So here's another question that I find kind of interesting. I know that when Musa first started, they were really looking for that super prime borrower. Made it a little bit easier to access debt facilities, but also is a little tighter on margin. So Danny here asks us, there's been talk about adding subprime lenders. Is there any update on that timeline?
Yeah, we've actually had quite a few discussions, both here in US and Canada. And absolutely, like, we needed to get back in business. We had to kind of pick our niche, get the systems and processes up and running. But 100%, we are like right now, we don't have this, haven't got to the point where we can handle it, that we're turning down like 1,000, 2,000 deals a month. And it's crucial for our future that we offer a credit score opportunity to buy. So that's an active part of what we're doing this very moment, actually.
Here's another question from Anthony Macedo. Hopefully I'm getting that right. When can we expect a relisting? I'm assuming he means sort of an uplisting to either maybe the TSX or talk of looking at maybe going NASDAQ. Are you guys having any of those discussions right now? Or are you too busy to even be worried about that?
No, TSX, yeah, we have. I mean, I think we qualify now, and we've been busy, but we are going through the process of probably uplisting. My only concern with NASDAQ, I don't want to go, but I've done a lot of research now, and I want to sound facetious, but you got to go, if you're going to NASDAQ, you got to be in the big boy club, and the big boy club is a minimum $1 billion market cap. And I believe when we start rolling out all the stuff we have with Allianz, that's when we're going to go, because there's a number of companies get in too early, and you're in with the big sharks and the big whales. So we want to strategically make the jump when we've got I know we're talking where maybe we hit 200 million recently, but I think when we hit $1 billion, then we'll go to NASDAQ, because then let's be frank, if Allianz wants to be on NASDAQ, they'll put us on NASDAQ. But I would rather wait until we're really well healed and we're ready to go.
Okay. Jay, you got anything?
You've actually addressed every item I was looking at. What states do you see coming online next? Is one question that came up, and I think it's an excellent question.
Well, I think so. It has to go by product. Right now, we're in 27 or 28 with the leasing platform. The listing site we're trying to figure out how we roll it out. And that's one of the big things that people don't realize. What we don't want to do is roll something out and have it come back and bite us. So we're trying to figure it out. In the auction, we're probably going to do Arkansas, Texas, and then probably Florida, and then move to California. And the same for the IntelliCar driver product for the dealership. We can go anywhere in the world with them. The thing with IntelliCar and drivers is it's the middle of the hub of the wheel. It can bring clients to the auction, to Musa. It's also the information depot where people can go, and we've got payment arrays that they can use, cars from all over the country by postal code. And that's the cornerstone. And that one's going to come out probably likely in May. And it's actually functional working right now, but we're doing the integration points. So yeah, you want to be careful not to overextend yourself, right? California, we're doing a lot of business, actually, we're doing a lot of business to the Northeast, New York right now, New Jersey.
So there are a lot of questions that are coming up here about breaking down your recent news releases. I assume that's stuff that you guys would have disclosed if you wanted to.
What's the question? You'll have to give me the question. I'll tell you.
Okay, so there's one question here about will PBX report net sales?
Yeah, so this is how it works, and the reason we started showing the gross sales is because we're Canadian and we have U.S. affiliates. We're limited in what we can do here in disclosing. The other issue we have, especially with the lenders, they do not want no one to know how much they're making or not making. So we really walk a tightrope with our partners. It's the same. We have an auction. Auctions, we have a lot of competitors. We want to provide numbers that we have legally, but it's complicated. And that's kind of why we started doing the gross sales, to show you, hey, this is what's going on. And, we've got lenders that just do not want people to know what's being made per unit. Because you got to realize these lenders are scooping up a lot of business that their competitors aren't getting. So that's always the balancing act. But we try to do what we can. And we've brought on a new CFO who's got an extensive background in the U.S. and he's putting together almost a formatted release that kind of shows you, here's our margin, this is that. And instead of doing the yearly, consolidated statement, we're going to try to do it monthly now. So you'll get more detail and you can use your own intelligence to kind of figure it all out.
Okay. Now, here's a question I got for you. This is my understanding of the solution, and this is something that I think a lot of people miss, and perhaps I'm missing it and I'm making this up. So correct me if I'm wrong, but it seems like, in a sense, what you're providing is sort of this back end where you're facilitating for companies to have their own white websites where they can access all these cars, and you're taking care of the financing, the trade-in, everything, but they can put their own brand on it. It sounds a little bit like what you've kind of created here is effectively the Shopify. I don't know if you're familiar with Shopify.
I know Shopify,
it's the largest company in Canada now.
We'll be above them soon.
I hope so. But it sounds like you in a sense, you've kind of created the Shopify for the auto industry.
Yeah, actually, I'm not going to dispute the fact that was part of the foundation of the thought. I thought, wow, and a lot of the processes they put in place, we've tried to replicate in terms of this fundamentals. The difference is our commodities a little bigger, and that model would be just as effective with cycles and boats like we talk about. So yeah, Shopify, I think, laid the groundwork for what we're trying to do.
Mm-hmm. All right, let's take another question from the audience. Can you elaborate on the status of the company's relationship with Tesla? Not sure if you want to go there. Is the 2018 Musa partnership ongoing? I'll also pull up the Musa, because Musa put out their own news release back in the day when they originally became the first non-captive leasing partner officially for Tesla. That's kind of Musa's backstory. Is they were effectively off to what would have been a huge NASDAQ company, ran into some I think that you said that they purchased like a subprime lender in Jacksonville, ran into some little problem, and you effectively bought the company for like $600,000 or something. I have to go back on CDR over 60% or something.
I'll let you guys do that one. But yeah, Tesla, we're still accredited as a leasing partner. We haven't actually, we've done some used Teslas and such. We can do new Teslas too if we want. But at this point in time, we are in conversations to jump into the EV market really large, but not at this point are we actively doing Teslas. And that's all I can really say at the moment until.
Okay. So can you speak to where a lot of the revenue is coming from? Is it coming through Musa right now?
It's coming from the auction and Musa and Telecar. We've cut auction down for a bit to, accommodate the modification of the system for the consumer. So back on that, but we did well with the auction last year. But had to focus on the future, so we made some modifications.
Okay. Will you guys be bringing Musa to Canada, or are you creating your own separate version of Musa for? Because I assume that this is effectively like a banking portal, right? It's not necessarily that easy to just take this fintech and just throw it in a different country.
No, we've got our own portal that we developed, so we modified it so it'll be ours going outside of North America, Canada, and outside.
Okay. Any other questions here from the audience? Jay, you got anything?
I think you covered the majority of them. One thing I want to ask about is the thing that I keep seeing repeatedly, and I mean, I'm the one that's covering the story at a deeper level than Steve is in a lot of respects. But you keep mentioning specialty insurance products when you reference Allianz. Can you kind of identify what those specialty insurance products are? Like, is it in relation to just the types of vehicles, or is it related to the consumer aspect that's oncoming, or what is it specifically?
Yeah, they're just what they're doing. They're adapting products for the consumer. That's their main focus. And so that's why they, like I said, the insurance for the residual value, gap insurance, taking away a lot of risks, but they're creative, and that's what makes them. It's exciting for me because I've been in the industry and they're doing stuff I've never heard of.
Mm-hmm. You kind of look like you're in pain. Are you like dealing with some back issues or something?
I do actually have a back. That's why I was going to try to stand up if you don't mind.
Oh yeah, that's fine.
I'll put the video off, but I'll listen.
I had a bout with sciatica when I was younger.
Right now I'm dying, but anyway.
Yeah, it's painful to watch you, so you guys can watch my pretty face. I'll tell you the story.
Give me 2 seconds. Can you give me 2 seconds?
Well, you go ahead and do that. I'm going to tell the story of the time I had sciatica.
So unrelated.
When I was, I'd say around 23, I went to, actually it's probably about 25, 26. Not that it's that relevant, but I went to a movie with my wife, and it was at a theater, I think just off the Danforth, and we walked out afterwards through the back exit, and I didn't know that there was like a step down. There wasn't even stairs. It was just like you walk out the door, and the road was lower than the actual. So I landed on my heels, and I jarred my back a little bit, and then probably about 3 weeks later, I started feeling like cramps in my butt. And then, seriously, and then like a week later, I was feeling all this tingly stuff going on in my foot. And that's sciatica is not it's not I don't know if Kelly has sciatica. I just, it's this really like you screw up a nerve in like what's really goes down your whole leg. It's not a fun experience. So
I just got a painkiller. I had one, take one this morning, but it's my sciatica. I can't.
It is sciatica?
I don't know what it is, but it's right in my sciatic nerve, so it's like a knife.
And AJ, you'll feel pain throughout like one side of your leg.
Well, that's why my leg, I'm trying to get it stiff, right? And I was going, oh my God, I got to get this right. So I look like an idiot on the screen here, but I'm okay now. I'm drugged up, so I'll start slurring my words.
I see Joel on the side there is asking about a silo question. Steve, are you able to scroll back in the questions?
Yeah, there was a question here. Here it is. Joel asked earlier, you mentioned an EV development silo in your January investor deck. Do you have any updates or information in regards to what your plans are for that, and what countries?
For the EV?
Yeah.
Okay, yeah, we'll start. Yeah, so we've been working on that for the U.S., and that's part of where Allianz is coming from. But inevitably, the ultimate plan from our perspective is to go to Australia, Europe, and China. Allianz has done some big business there, and I'm not European, but from what they tell us, that the European market is just primed for an explosion. So yeah, that's kind of one of the reasons I think they're coming to the table, because all our products have adapted, and we've been doing that for the past year.
Mm-hmm. Okay. Let's really talk about just how much history it took to create this solution, and why. Like, let's say that myself and Jay, we wanted to create an automotive fintech solution without really having the connections or the access to dealerships. Why would it be so challenging for us if we're just like, hey, we're just going to create the site, we're going to create an app, we're going to hire some great app developers? What are those sort of barriers that create a moat for an app like this? That would make it challenging for us to just go ahead and do it as guys who don't own a dealership or don't have the background in the industry.
Well, I guess I don't know who the ownership structure is at Carvana. Look at them. They created an app. I don't know if it'll work. I think what we differ, and you go to individuals that are part of the management team. For 15 years before going public, I played with this, made tons of mistakes, thought I knew, got ripped off. I think that's the big issue, and knowledge. The car industry is simple on the surface, but really it's complicated. And then you take the consumer into it, and you're going to need a really good wealth of knowledge and smarts. I'm not saying, because the way things are going, I mean, the car, you get to a point where really you can talk about a commodity car, boat, anything. And if the system works, it doesn't matter the source of we use the car industry, but I believe that the younger, or you guys like you could probably build something as good or better than any of us, because what's already been built, all the mistakes have been made. So I wouldn't be shocked if some young superstars come together and go, you know what, we can take this to another level. As an example, I got friends of my son, and they bought into the company through him, but tech guys. And things that nobody knows about this, but so they were looking at what we did, and they were saying, oh my God, we do 3D stuff for other industries. And they asked me, said, we like what you're doing. And they said, one of the problems that we noticed was when you take your pictures, we can stitch them together and we can go over the car and it looks like a video. And I said, that's kind of interesting. But the thing that got me, they said, well, you know what else we could do for you? Because I know it's a challenge. People pull up Carfaxes and all these other things that say the car's been damaged. Well, we can put a system into our process where it'll take the paint thickness of every panel on the car and tell you whether it's been broken. Now, the only one I could do originally was you had to use one of those things by hand and go through it. Well, theirs is built into the program they're building. I'm like, so if you're buying a, say, 3-year-old Porsche and you use that kid's system, by no unequivocal that this thing has had an accident, because it shows you right there. Because paint, that's the number one source. You can decide whether a car has been hit. Is the paint thickness consistent around the whole panel? So I looked at that and I'm like, oh, I've been doing this for 30 years, and these guys are, let's say, 23. In fact, one guy in the company's made quite a lot of money because he bought it 16 cents with his own money. But I was like, that's the future, and this is why the problem in this industry is no matter what you think you've got, if you're not prepared to keep forward, you're going to fail. And that's one of the reasons I say I talk like this and say, like, I think I've done okay to get us to this position, but the future is going to be guys like them, guys like you, because this is going to be a continual evolving situation because of the technology.
Mm-hmm.
You have to have my vision. I want to recreate a digital representation of every single used car we sell.
Let's talk about the automotive industry for a second, because I know you've got a background with dealerships, and obviously, you're in a sense you're working with dealerships. In a sense, you're kind of working against them.
No, I don't. No. What I'm trying to do is get the dealer to see the light and get processes in place so the consumer doesn't need to go to Carvana or car gurus. We shouldn't need to have those outside services to service our clients. I'm not against the dealer. dealer. I just want all of us as a team to system that makes the acquisition of an automobile an exceptional experience.
Okay, so so this is a sort of a question for you, as somebody who's owned dealerships, and just sort of talking about where the industry's heading. And I know Jay and I talk about this quite a bit, and he's not on exactly on the same boat I am, of sort of where EVs are heading. But let's just assume that electric vehicles do become a big thing. I think GM might have announced yesterday that by 2023 they're going to have like 25 cars or something like that, a big number. And we're seeing this move towards lithium-ion cars, and there's still some stuff going on with hydrogen and fuel cells. But what does that mean for the car dealer, right? Like, I got a buddy who owns, I think he owns a Nissan Leaf, and he told me that he's like hardly ever been to a dealership because he doesn't need oil changes, and there's just not as many moving parts, so there's not as much that can go wrong. And my understanding of the whole car dealership business is that they make all their money off of maintenance. So what do you think is going to happen to car dealerships should electric vehicle adoption become like the new norm?
Yeah, that's a good point. You're right. Most dealers it's just a fact. Cars were to break. Electric cars will break too, believe me, but not to the extent of the electric. And the margins that they made rely significantly on the fixed operations. So the sad part is the dealers that went out and spent millions and millions of dollars with these monster facilities with all these bays, and the future doesn't need them. I mean, you're still going to want to, I think the electric industry right now doesn't have a proper sales process. And I include Tesla in that because I bought one. It's terrible. But you're right. There's going to probably, what's happening? The dealers are going to downsize the number of people they need. The skill set of the person repairing the electric vehicle is going to be exceptionally good, because that front end electronics is just unbelievably complicated. So a different repair cycle. You still have your brakes and tie rods and stuff, but the engine, no. The electric motor can be replaced in 10 minutes. And the price of them is going to probably go down. So I see a lot of dealers probably downsizing the size of the store, downsizing the number of people they need to manage and operate the store. And you're not going to have really what they call a salesperson. You're going to have a customer service rep who walks you through via this venue here, car, and all the features. So it's going to be a revolution. That's part of the reason I sold. I knew I did renovations, and I'm like going, boy, and this is way back when I'm a fanatical reader. And I said, well, if this thing only got 15 moving parts, what am I going to do with all these techs? I got 10 bays. They don't come for oil changes. They get their tires replaced. They need brakes every 2 years. It's a completely reorganization of the car sector from a dealer franchise perspective.
Mm-hmm. And I've been to your house. I've seen all the cars in your driveway. Quite the collection. I pulled up in my 2007 Hyundai Elantra that my wife drove into a barbed wire fence that had a big hole in the side. And
missing a door handle. I have to add that.
But at that time, I know I'm no longer driving it, but at that time it was missing 3 door handles. I was down to 1.
Wow, that's a damn. You're getting charged for that, buddy.
Oh, really?
Yeah, there are certain safety standards you have to have, buddy.
Oh, geez. Well, I never got a ticket. Okay, so let's sort of wrap this up with talking about what kind of near-term catalysts investors can look forward to, or possibly expect over the next, say, 3 to 6 months.
Well, I think now what our focus is going to.
Sorry, go ahead.
Go ahead.
I was going to say, I don't mean to put you on the spot by that. Obviously, you can pick and choose what you're comfortable talking about.
No, it's obvious. Like, we're at a point now where we're going to start expanding the execution, right? So we built up. We're doing well month by month, but like you say, we want to bring in the new peer-to-peer auction. We want to expand on a relationship with our partner CB Auto. We want to bring products to the table for the EV market, and fundamentally what we're going to do, and we will be, is going to be a leader in EV leasing, purchasing, products, the whole bit, because that's the future in our world. And that's it. I mean, we've got the foundation in place now. So now it's called execution.
So, okay, I got to follow that up with the obvious question that people who are sort of new to the story trying to understand. Why is it that you guys would have a shot at leasing as opposed to, say, the captive options? So captive meaning the internal options that the company already has, say, Ford
You mean their own funding sources?
Yeah, exactly.
Well, the actually OEM funding sources have limitations. The cost of capital, depending on which OEM you're at. Our cost of funds is pretty good. You add in the helping another factor of a large international company. One of the reasons that Tesla did well with us originally was because we're competitive on rate, schedule, flexibility, and terms. And having been a car dealer, and I'm just going to give you, this is a real-time situation now. We started this process, say, in September in real. And unbelievably, the OEMs, the big ones, the high end, we beat quite substantially on their lease payments. And there's a lot of limitations because nobody understands the lease value. Nobody can predict the electric vehicle market today because there's no history. So we can be more flexible with our partner and say, well, you know what? You're going to lease that new Ford Mustang, and Ford's going to lower the residual to work within the parameters of the lending. Now we come along and go, you know what? We'll beat that by $100 because we've got an insurance policy to guarantee the residual value. They're not going to compete. They're going to have to come to us and go, oh, can we maybe have that product too? Like and this is the real world. I have my own leasing company. And when you get into a situation where you're offering the consumer risk financing options, that is a big thing for us. And I think we're poised to do that for them. And like you said earlier today, someone asked about, we are kind of focused more on the, say, 675, 7 above. But we do have some pretty good people at the table that would like to be part of the 5 and above. And what we want to be is a one-stop shop, a good place to come to make sure whatever you're doing, wherever you are, that you're getting treated fairly. And that's part of the reason when we talk about expanding the dealer base. Here to sound like a bad guy, there's good dealers and there's people who are stuck in yesterday. And unfortunately, the guys that get it and are good, they adapt fast, and we want to do business with people who see the future. We don't want to sit and waste time with stuck in the 50s like some of them are. Most dealers are great. And the one thing I have to give to dealers, and I was a dealer, we're entrepreneurial. We're very good at adapting. And the ones that can adapt generally die, but you'll see the car dealership space, you still need your car repaired. You still need someone to explain to you. Like right now, my key fob on my Tesla went dead, and I try to fix the battery, it's still not working. So I got to go there and get it fixed. That's not that complicated, but for whatever reason, we couldn't get it to fix. Fortunately, I had a second one. But there's always got to be customer service tied into your long-term solution.
Have you had anybody calling you, congratulating you, who bought a bunch of shares, say in that 10, 20, 30 cent range, that have just seen it recently rip, that are ecstatic? Or conversely, have you had anybody who you thought owned a bunch of shares that has been kind of quiet and you're now questioning if they actually
honestly
sold on you?
Honestly, I would say there's maybe 1 or 2 that I know of that bailed. The majority of people that came to the table, and maybe like you guys, the conceptual business plan was good if you could execute. And so a lot of people held in. And I spent once to the States, I underestimated, of course, that 50 country thing. But I think once people saw we were going down the road, they hung in. And yes, I've had people, a lot. I mean, I've made a lot. I hate to say I've made a lot of people some big wealth, which I'm happy. I take it personally. A lot of family, a lot of friends, in-laws, and it's nice to see they put 25,000 and today it's worth 250. Right? Mm-hmm. That's nice.
But I know from the first time I talked to you, I sat down with you. Your stock was at 6 cents, and you said to me, and I thought this guy must be crazy. I remember you said to me, "I don't see why we can't be a $50 stock."
Well,
and then look at it now; it's over a 20 bagger since we had that conversation.
Yeah, well, you know what it is, I guess, because I got to understand the competition. I just couldn't understand how their valuation was like that. And it was good, actually. You know what? Because there's a lot of lessons to be learned here, and I had to go through that. But one thing that I realized during that time was, and I think my lawyer said it to me too. I think you did too, Steve. I was like a one-man army, and I had good people with me, but we needed to supplement the skills. So I've been so frugal with the money because we were self-funding a lot, right? And then it hit me, and I went, you know what? I got to bring Lambs of the world, the Brent Greens, the John Canaleses, the Bruce Polks, and elevate, and get ourselves a good CFO, which we did. So it's a series of steps. But yes, on the outside looking in, I said we can kill these guys. And I know I might be stupid, but if you had Kel, what's your best skill? Persistence. I don't give up. I keep forging ahead, and I still believe it. I don't know why we can't be $50 a stock, and that's the truth.
Yeah.
Look at some of our partners, some of the people at our table today, some of the largest corporate entities in the world. I'm in conversation with some very big banks in Canada. Even Hunt's family who are very successful, and they stuck by right from the beginning, from 25, 30 down to 5 up to 8. Like I said, so I guess I'm not sure. I in my mind's eye, I know what we could do and be, and bringing good partners that do things better than we do is always a big part of it. And we're poised to maybe hit those lofty conversations in the next year or so.
Okay. Well, we keep getting one question that is about percentage breakdown of segmented revenue in the financial statements. That's probably more of a question for the CFO, or.
Well, I mean, it depends on what quarter, right? Because what happened in the summer, the biggest revenue source was the auction. And then in September, October, we decided that we're going to work with the dealer, but we need the consumer part. And so we kind of abandoned the auction. Not abandoned it, but we just refocused. We did some business. It was just, we weren't actively looking for any. And we modified it to go to the consumer, which in my opinion is going to end in the simplest and easiest revenue source we have. Construction's there, we have inspection, the whole bit. Pick your car up at home, inspect it, buy your car. In the interim, MUSO is, of course, because the commodity of being sold is average 50, 60,000. And then you got IntelliCar, which combines the dealer system and the consumer through the CB Auto. So for you to sit there and ask me to tell you which is going to be number one right now, of course, is MUSA, but the 3 separate silos are all going to be very low risk and very good upside. And so I think we've got 3 distinct. That's what I think we're different from everybody. We don't need to rely on just one thing. We've got many places to make money.
Okay. And last comment I'm going to share, and then we'll wrap it up. Joel Maduria says he's going to donate to get you a better internet connection. And thanks for coming on.
Well, yeah, my internet is, I'm in the country, right? So my internet is a little intermittent, but he wouldn't be able to get a better one because I pay for the best, but it is intermittent because I'm a country boy.
Yeah. Well, I really appreciate you coming on. I know your shareholders do. This is something that, I mean, we've got across all platforms, we've got over 350 people watching this the entire time. So it tells us that there is a big following. Lots of people are interested in this story, and not very many CEOs are willing to put their neck on the line and talk about their company. So I know all your shareholders really appreciate you hopping on here and doing this. And we'll have to get John Lamb on sometime. I haven't really got to chat with John yet.
Yeah, you should. John's very smart, and I'd like to try to get our partners at Allianz on.
That'd be really fun to have Allianz come on.
No, they're willing. I mean,
you can have a round table live.
Yeah, I mean, whatever works. I mean, they're in Germany, so you have to time it right because they're 6 or 7 hours ahead, right? But if there's a way, it'll be good because they're very bright. I have to say, after the year that we've dealt with them, they're very, very focused, very, very diligent on everything they do. They take time, which is good, but we're very fortunate to have them with us for sure.
Okay. Well, thanks so much for joining us, Kelly. Hopefully, if there's any big news coming up, we'll get you back on to talk about it. And keep up all the great work. And I hope you have a great weekend.
Thank you, guys. Appreciate it.
Thanks, Kelly.
Thanks, Kelly. Okay, so that was fun. We learned some stuff. We had a little bit of slander going on in the YouTube
I saw
comments there.
A bit unnecessary, but
yeah. So like it's that's we don't get a lot of that. I once had somebody call me a fat jerk, and I was like, oh, my first basher. But yeah, that was great. You can really tell that he's really developing a real shareholder base that care about the story. I know that we're getting a lot of comments about people want the breakdown of the financial numbers. We're gonna have to wait for that. I haven't spoken to the new CFO. I don't know exactly, and if I did, I don't know that I'd be able to say much because really they're going to disclose what they want to disclose. So that's why I didn't want to pry, guys, as I didn't want to keep asking, give us the specific breakdown of revenue, where the margins are on everything. That's not really for us to ask. It's for them to disclose in their quarterly financials. Or put a corporate update.
The last thing you want is for someone to get into regulatory trouble because absolutely.
And then we get shut down. And what am I going to do if I get shut down and I can't run SmallCapSteve live?
You'll just be Steve, not even SmallCapSteve.
Yeah, that'll just be Steve. So I think that this was fun. Any thoughts from the interview?
I think it went well. To me, the biggest aspect of Allianz as a whole, and I've said this to you countless times over the past few days, Steve, is the biggest aspect of the entire MOU with Allianz, to me, is the fact that Allianz allowed Powerband to put their name out there, publicly disclose that they are working with them. To me, in terms of an MOU, sure, formally things aren't locked down, but Allianz isn't about to go and put out a fluffer press release on something they don't intend to close, right? It takes a lot for a company of that size to allow you to use their name in a public disclosure such as that. So I think that's a very, very positive sign that kind of goes, it doesn't get the appreciation it should. That's really what I get from the entire week that we've seen from this company. They're in a very good position at this point in my mind.
My favorite moment in the chat was Jamie Payette.
I got that too.
For some reason, I think he's bag gang on CEO message board. I don't know exactly, but he was giving us crap for not focusing. I was just trying to give Kelly time to adjust his back. Sciatica is a pretty serious thing. I wanted to make sure that Kelly had some time to readjust there. We like to accommodate our guests. So where should we leave it? Do you got any thoughts you want to get into? Well, I get a few minutes to talk to you, or you just want to wrap it up? What do you think?
Actually, I kind of want to. This hour's been dedicated to Powerband, but I actually want to comment on one single story that came out this morning.
Okay,
Exebic absorption. I can't say the lot.
Okay, Exebic. This is a stock that's done tremendously well,
except for today.
Ooh.
So they had a very rough 2020.
The stock ain't looking so pretty. And by the way, I'm going to get real charting software because this is so bush league. I pull up a CEO.ca. That you can tell how much of a trader I am because I'm pulling up a message board stock chart.
Yeah, for the record, you've talked to me about it like 17 times in the last
12
hours.
So
I know it drives you nuts.
It's so complicated to get they're like all these companies, like you call them like Interactive Brokers or QuoteStream or whatever. They all want to talk to me on the phone about like getting my account set up. It's just like
it's
why can't I just get the data and start? Anyways, we don't need to get into all that.
Anyways,
so what happened with Exebic absorption?
This morning they put out a brief release. I think they titled it, they provided an updated 2020 guidance. So to me, providing updated 2020 guidance midway through March of 2021 typically isn't a good sign. So I caught on real quick to what was happening here. So originally last year, I'll provide a bit of a backstory. the original guidance was between 80 and 90 million for this company for revenues for 2020. They also said that they would do some great EBITDA margins of between, if you want to scroll down, I think I have it in there. EBITDA between 11 and 13%, along with positive net earnings between 7 and 9%. Throughout the year, that guidance literally started falling apart. Second quarter, they said, we aren't going to guide towards the margins we had before, but we'll say positive net earnings and positive EBITDA. Then after the third quarter, they reduced guidance to 70 to 80 million, and any hope of positive earnings or EBITDA was just gone. Today, they said that they will actually be doing 57 million or so for 2020, which on the low end is 18% lower than their revised guidance number. So they had a very, very rough 2020. Negative gross margins are a possibility here. SG&A expenses, meanwhile, are between 15 and 16 million, pointing to a very negative quarter for a company that thought they were going to do great positive EBITDA numbers. Plus, they're actually clawing back revenue based on construction timelines. They lost 2 sales that had partially been recognized as revenue, and they had to roll back 1.9 million as a result of the deteriorating financial position of a client where collection is now uncertain. So for shareholders, this was a very, very bad news release and a very bad day. At one point, trade down to, I think, 474 or something. So it's something that I really wanted to address just because it's been such a wild day for these shareholders.
Oh, and in better news, you're soon gonna have a new set, I hear.
A new what, sir?
A new set.
A new set. So yeah, hopefully. I'm supposed to be removing conditions on the purchase of a new property today. Waiting on another call from my broker here. While we negotiate with lenders to get the appraised value I want. For those of you that don't know, purchasing real property is not the easiest when it comes to lending. Solely for the purpose of they only want to lend on the house and nothing else on the property. And when it's a 16-acre property, it comes with some complications, but we're getting there. So
Jay dreams of a bigger house. I dream of having Gronk on the show. I love Gronk.
I will say right
He's
now,
on Midas, so if you go on Midas, you can come on my show.
If you get Gronk on, I will let you have the full hour to yourself because I don't even know what the hell you guys are talking about.
He was on CNBC this morning. Gronk's now a trader, finance guy. So he needs to be on. Gronk, if you're watching, you got to come on SmallCapSteve Live.
I will say now that Kelly's gone, our viewers have literally halved, which is hilarious.
we're from 400 viewers to 170.
That's all right.
Okay, well, look. We got a good interview coming up this afternoon with is it Scotty P? Scotty Patterson?
Scott Patterson, yes. In 20 minutes or so, he will be on the Daily Dive, and he provides some market insights. I'll be honest, I didn't get the chance to watch all of it. I need to go back and do it. Last time he commented on the frothy markets, and this time it's largely dedicated to that, to my understanding. He does address QU Media, which has been having a great time since he last showed up. He's
one of those guys. Scott's one of those guys who he's already like really wealthy. He was like the top guy on Bay Street during the .com, CEO of Yorkton Securities. Which I don't know if they got bought by Canaccord or what happened there.
Yeah, I can't remember the story.
I was a math teacher 3 years ago. What do I know? But people who know who Scott is, they talk very like this guy was a big deal during the .com days. And so I kind of look at what's happening with the market and QU Media, and I do think that it's really, really interesting to see how he's going to be able to play, because there's money flying into tech names. He's got this deal where when you got a guy like Scotty P who has a history and he's not giving up on something, he's not throwing in the towel because he's been in this thing for 5 years. You know he's going to try to find a way to make it work. So, The last question here. Somebody asked, did they disclose what price Allianz paid partnership guys? No, we don't have terms yet, and that's one thing I'm always asking Kelly about. Like, what are the terms? And like, he's not going to tell me the terms. I talked to Kelly on the phone last night, and I'm like, have you guys even discussed terms? He's like, yeah. But I couldn't get it out of him. So they haven't disclosed it publicly, and I tried to get him or I tried to get it out of him privately, and he wouldn't tell me. So based on how, go ahead, Jay.
It's very by the books.
Yeah. But look, guys, you could have spent your last hour staring at any screen, any place in the world, but you chose to spend it with me and this guy.
Oh, you got me while I was stretching. I sit at a desk for 8 hours without getting up, but I got to stretch occasionally. You always seem to catch me right that time.
I was getting uncomfortable watching Kelly do his back stretches. Look, and our producer, Chris, why don't you come on camera and tell our audience what you want them to do, because you keep messaging me. Our producer, Chris, are you there? He says I can't. Oh, because he's not. This is the thing. Chris is too nervous to come on camera. He went and he bought himself like 10. He ordered 10 shirts that are just like, the shirts are just pictures of dollar bills, like money. I'm gonna say, hey boss, I'm gonna wear these shirts on every episode, and that's why I won't come on. Is because he bought 10 shirts and apparently all 10 of them are dirty. So what he's on me about. What Chris is on me about is he wants us to just say, if you watch us on YouTube, hit that like button, hit that subscribe button, hit that notification bell. If you watch us on Twitch, do whatever people on Twitch do. I'm too.
You still don't know what it is after 3 months. That's hilarious.
And if you're watching us on Roblox, are we on Roblox yet?
I think you may have won that bet, by the way.
Oh, jeez. I told you. What can I say? I'm SmallCapSteve. I'm the original. All right, everyone. Look.
Enjoy your weekend.
I hope you have a great weekend from me and my trusty sidekick. You haven't lashed out on me for calling you that yet. I know it's coming. Have a great weekend, everybody.